and welcome to this week's video, taking a look back at the main stories that have impacted the financial markets in the last few days. Now, fair to say it's been pretty hot temperature-wise for most of us, but things have been heating up in the market as well. And we're going to have a look at something that's been talked about a lot this week, which is euro-dollar parity. That's when the euro, €1 is equal to $1. Why has this been happening? Well, on the morning of the 12th of July, just a couple of days ago, the euro fell to 1.00048 against the dollar, almost parity. But why? Well, we saw some very strong payroll figures come out of the US last Friday, and twinned with that, the expectations of a tighter monetary policy by the Fed moving forwards. The dollar index, again we spoke about briefly last week, is at its highest since October 2002. We're also seeing what is perceived as some ECB, that's the European Central Bank, indecisiveness compared to that of the Fed. In fact, we've seen one interest rate rise from the ECB compared to several from the Fed. We can't, of course, ignore the prolonged war that's going on in the Ukraine and the impact that that's having across many markets, really, particularly in terms of energy problems, particularly for the EU. Now, the Nord Stream gas pipeline, which provides the majority of gas from Russia, Eastern Europe, into Western Europe, has had planned maintenance begin on Monday, and it's going to be closed for at least 10 days. Now, some analysts are questioning whether this is actually planned maintenance or is it as a result of political concerns between Germany and Russia. Now, if that is the case, further restrictions on the supply of gas to the EU could well tip the EU into recession, which again is adding a little bit more strength to the US dollar. Now, we did see some support around parity earlier in the week, with analysts talking about further support around the 99.50 mark. Well, in fact, Thursday lunchtime, UK time, we've actually seen it go through parity, and we have seen a little bit of a bounce, not above the one, but from the support level of 99.50. So worth keeping your eyes on that and seeing what happens moving forwards. Next story to have a look at, and probably unsurprisingly to most of you, is that of inflation, but particularly inflation in the US. Now, the US CPI figures have come out, and they're currently running at 9.1%. Now, that was higher than the expected 8.8% for most analysts, and in fact, it's a level that we've not seen since 1981. It caused a spike in volatility after those figures came out, and we saw plenty of action in the US markets. Dollar yen, for example, topping 138 for the first time for a while. Energy, as we've mentioned in the previous story, is the strongest driver of inflationary growth, particularly in the US, although worth pointing out that food and housing are on the increase too. Now, of course, you could say, well, that's the same across the board. But President Biden came out with regards to energy pretty much straight after those figures and said the current figures don't include the decline in the price of natural gas futures that we have recently seen, and which he expects or thinks should continue to decline in the coming months. Now, July the 7th, the price of natural gas broke the $6 mark. And in fact, on the July 12th, just earlier this week, we saw a breakout, which now seems to suggest $6 is providing support for the markets for natural gas. It's going to be interesting to see moving forwards. This maintains this upward trend, maintains the upward pressure on inflation, and will we see $7 a contract do the same thing and actually become acting as a level of support? So natural gas well and truly in focus, stories from Europe and from the US piling in this week. Again, another market that we need to keep a close eye on for a number of factors. So let's not underestimate its impact on inflation. Okay, the final story we're going to look at this week is going to take us to one of the best known brands, best known equities in the world, and that's Coca-Cola. Now, I'm sure we could all do with an ice cold drink of some sort at the moment. But let's have a look at what analysts are saying could well be happening to Coca-Cola in the next few to 12 months. Now, Coca-Cola first went public over 100 years ago, and its stock price performance so far this year, and in fact, looking back over the last couple of years based on the circumstances, is proof that an experienced management team can overcome most challenges, particularly when they're allied with a product that has some serious internal long-term strength. I don't think there is going to be anywhere on the planet that probably hasn't heard of Coca-Cola in its lifetime. Since the start of this year, Coca-Cola has actually risen by 6%, which is a pretty good performance when you compare that against the S&P index itself, which has fallen 19% in the first half of 2022. And in fact, that's its worst first half performance since 1970. But what are analysts saying about the stock itself? So Wells Fargo currently have it as a buy rating with a target price of $74. Now, if we look at a range of other analysts, their forecasts are varying between $64 to $76 in the next 12 months. And when the stock's currently trading around $63, there seems to be quite a lot of positivity in terms of the strength moving forward for the next 12 months. Will we see it hit those upper levels of forecasts, $74, or will we see it maintaining steady progress, rising a couple of dollars or so in the next 12 months? We did see an important support level was around $60 earlier this year. Very quick recovery when the price went through the $60 mark in May and June. So again, that's an indication that this stock is probably priced quite cleanly as it stands and may well be something to keep your eye on over the next 12 months. Keep an eye on those analyst forecasts and certainly keep an eye on any figures or releases coming from them. Well, that's it for this week. Thanks very much for watching. We'll be back having a look at other stories this time next week.